Bloomberg News.
Well, my next guest is willing to travel the world for the best investment opportunities, and he's gotten some calls very right, including his calls on commodities. He's Jim Rogers, chairman of Rogers Holdings, joining us now from Vienna. Jim, good to have you back on the program. It's been a while.
I am delighted to be here, Betty. I wish you were here. We could all go have some Wiener Schnitzel.
Okay, next time. You got to let me know that you're going to be there first. All right. In the meantime, since you're in Europe right now, Jim, give me your take right now on what is happening in Greece. Should the Euro region countries be helping out Greece?
No, of course not. I mean, they should let Greece go bankrupt. It would be good for the euro. It would be good for Greece. It would be good for everybody. If Greece went bankrupt, then everybody would say, boy, the euro is serious. It's going to be a sound currency, and the euro would go straight up. It's not going to happen that way, but that's what should happen.
What do you mean? Wait, explain that to me. What do you mean? That if Greece went bankrupt, what do you mean that this would make people serious about the euro?
Then they would know that people cannot go and spend money they don't have. They cannot spend a deficit, 12 or 13% of their gross national product. They would know they can't just print money and paper over problems, that everybody would have to run a disciplined and sound currency. Betty, that's what the Maastricht Treaty said in 1992. Nobody's paid any attention to it since. It wouldn't hurt the euro very bad. It would help it. Greece is only 2% of the gross national product in Europe. If Idaho, say, went bankrupt in America, do you think America would fall apart? Do you think the U.S. dollar would disappear? Of course not. So, in my view, it would be good for the euro and for Europe and for Greece if they let them go bankrupt, nobody bail them out, and then we could go forward.
But you're not seeing that right now.
You have some discipline in Europe.
But Jim, you're seeing...
No, of course not. I said it's not going to happen.
But you're seeing the euro get hit right now. Okay, let me ask you this then. If Greece were to get its house in order, though, I mean, you may argue that this is a little bit too late, but if Greece were to get its house in order and bring down the budget deficit and start cutting spending, shouldn't that then, doesn't that justify some help from the euro region?
If they do it, Betty, of course they do. But the Greeks have been saying this from the beginning of time, but certainly since the beginning of the time they got into the EU. I mean, they covered up the numbers back at the beginning of the decade. They've been saying this since the beginning, and they haven't done it. Things have gotten worse. I'm not just picking on Greek politicians, by the way. The other politicians in the euro have been doing the same thing, including the French, the Italians, and everybody else.
Jim, do you buy these accusations that speculators are behind the euro's fall, that hedge funds are behind speculating on the euro? You buy that?
No, of course not, Betty. Do you think that the speculators and the hedge funds went out and ran up a deficit of 12% of the gross national product? Of course not. The Greeks did it, and the Greek politicians did it. Then other people see the problems, and they start selling. The main people who are selling in Greece are Europeans who are selling, because they see the problems. It's just like in America. When Fannie Mae got into trouble, people sold Fannie Mae. Now, some people, speculators got in too, as people call them. But the speculators didn't cause Fannie Mae to run up gigantic debts and get into trouble. Management did. And then that attracted investors who tried to take advantage of the situation.
Okay.
The same way, Betty, that when somebody discovers a gold mine, speculators come in and buy those shares. They buy those shares.
Right. They're not to blame. They're coming in here for the opportunity. But hearing what Sarah Eisen is saying about the yuan and the Chinese possibly moving away from this dollar peg, what are your thoughts on that?
Well, Betty, I would have thought they would have done it by now, so don't ask me. I'm pretty hopeless at this. I think it's good for China to let the renminbi float. I don't know why they haven't, but they haven't. Yes, it's going to come any day, but don't ask me.
I know why they haven't, Jim. I mean, you know why
should have come by now.
But you know why they haven't, because they want to continue to have control of their economy. They don't want to factor in more volatility.
I understand that. That's a short-term thing. I'm talking about for the long term. China cannot be a great dominant economy with a blocked currency. I mean, nobody can have a great international economy with a blocked currency. And as far as Sarah's point about inflation, look, there's inflation in China. The Chinese know it. I know it. They don't lie about it like some governments do. They have inflation, and they realize they have a problem. One of the reasons they have inflation so bad is because they do have a blocked currency. The money is trapped in China, and it has to stay there and buy goods, and therefore prices go up.
Well, you have Nouriel Roubini talking about a 4% appreciation. How much do you think the yuan would appreciate once they start moving away from this policy?
If they let it flow, Betty, the Chinese renminbi over the next few years will go up a great deal. I mean, the Japanese yen went up 400% over a few decades against the dollar when they were in a similar kind of situation. Whether it's 2% or 6%, who cares? I mean, the point is the renminbi is a very sound currency compared to most other currencies, and it's going to go much higher over the years. It's already been going higher against the euro for the past 4, 5, or 6 months. It's up 5 to 10% against the euro in some major currencies already.
Okay, all right. And Jim, we're coming up against a commercial break, but I got to ask you then, related to that, then, what do you see then for the dollar?
For the U.S. dollar, well, as you know, I'm long the dollar. I've been long the dollar for 5 or 6 months now because I expect to rally, and so far so good. I'm not selling yet.
Let's turn to equities very quickly, because I believe back in January you had said that stocks around the world are vulnerable to a correction. Has that only increased in your view, this vulnerability?
Well, of course, hasn't it in yours? Don't you watch Bloomberg? I mean, stocks are up a whole lot.
Come on, Jim.
Stocks are up a lot. It's time for a correction. I own commodities and I own some currencies. That's the way I'm playing this. If the world economy gets better, you're just talking about steel and a few other things, then obviously the real assets are going to be a good place to be.
But Jim, here's a question.
I own the euro. You know what I own.
Here's a question that some of the chart watchers are raising. John. It's now been a year since the March lows for the stock market. You look at the one-year chart and you say, wow, we're up 66%. But as that one-year chart starts to change, you no longer see the lows anymore. Some chart watchers say that changes sentiment. People say, oh, okay, we're not up as much over a 12-month stretch. Maybe that's bullish. Your thoughts on that?
Well, I'm not smart enough to do things that way. I just know stocks are up a lot, that the world economy hasn't gotten much better. And whenever stocks go up a lot, it's normal to have a correction. No magic about it.
What kind of correction are you looking for, Jim? What do you think, like 10, 20%?
Betty, you know I'm not smart enough at that. I'm a horrible stock market timer. Watch Bloomberg. You have guys every day who can tell you exactly how much the correction is going to be.
Right, and the people watching Bloomberg are watching you right now, so they want to know what you have to say about that, Jim.
They should know that I don't know anything about stock market timing. I'm a horrible trader. I own commodities. If the world economy gets better, commodities are going to do better. If the world economy doesn't get better, governments are printing so much money, Betty, that commodities will be a good place. And by the way, if the world economy doesn't get better, they're going to print even more money. So I'm sitting here owning commodities. I'm a simple person.
Hey, Jim, let me jump in here and ask you something. Let's just focus on volume for a minute. Market's been going up, but the volume has been going down. I think there have only been 4 days since February 1st when volume has been above average. Is that a cause for pause and make you nervous at all?
Well, of course, that's what I keep saying to Betty, is we're overdue for a correction. These are technical signs, as you know, that there may be a correction coming. When things go up on low volume, the technicians will tell you. It means get ready for a correction. I mean, I'm not a technician. I don't really know how they work, but I do know what they say.
I want to just stick with that commodities thing, Jim, because a lot of people, of course, tune in. They want to hear what you have to say about commodities. But gold in particular, you've mentioned before in previous interviews that you see gold possibly going to, let's say, $2,000 in the next decade. Nouriel Roubini has been on the record saying $2,000 is complete nonsense. What do you say about that?
Mark your calendar. In December 2019, we'll see who was right or who was wrong. No reason to argue about this kind of thing. The market's going to... My only arbiter, Betty, is the market. In the next 10 years, we'll know whether gold got to 2,000 or not. I have no own gold, expecting it to go that high. We'll see.
Okay, Jim, always good to have you with us, to spar, to talk, be buddies. All right, Jim, thanks so much for joining us. Jim Rogers of Rogers Holdings.
Bye-bye. Nice to see you all.
All right.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg Radio. Copyright Bloomberg LP 2010.